And hello, you day trading enthusiasts. Welcome to the Day Trading Coach. This is Wednesday, October 7, and we are doing the 9 a.m. Mountain Standard Time market review class. And for those of you who never attended one of these classes, when you do attend a class at the Day Trading Coach, make sure as you register into the chat room to log in, your first full name, your first name, last name. And are you a guest? Please just write down guest. If you are in mindset, phase 2, trading, just complete, identify yourself. So if we wanted to ask you a question, we're not going to ask questions over your head. This is important. This helps the coach. And after all, we are inviting you into our home, into our office, and we should know who you are. Wednesday, I get up. Oh, I get up. I slept in today big time. And so I did not really get into the live market in a timely manner, especially when I had, was about 32 emails to reply to this morning. Was busy yesterday looking for office space, and boy, we're excited about the new office right on the edge of Okotoks, close to Calgary. And with that said, Wednesday means the market tends to have good swings. That's common trait. Another thing about Wednesday is that the market closed up. So if the market closed up on Wednesday, then the odds would be good that the market would pull off before go higher high. So the market closed up on Wednesday. The odds were good that the market would pull back and then go for another higher high. That's common behavior of the market. So I was aware of that before I even started my computer. This is important to you, that before you look at your charts, that you do recall what happened at the end of the day. This starts training you to remember things from prior days. It's extremely important to you that you remember what happened in a market, so when you come into the market at a particular time, your mind is engaged on what happened. So, let me look over here. So here we go. Right before the market opened here, there was over here. It was roughly there. So this is what the market looked like before the market opened. So I already know coming into the market there could be nice swings, because there's a common trait to the market on Wednesdays. Before I start my charts, I already know that the market closed up on Friday, because I remember from the day before, and that, the market closed up, on Tuesday, and I do know that the market needs to have a pullback after that push up into the closing. So the market into the opening should have the pullback, and if the market into the opening has not had the pullback, I expect the market to open, drop, and then pop to go test the high. Now listen to what I just said. Before the market opened, which is coming right about here, the market closed up. The market was up during the night. The market closed up. Okay, so the movement was up. before the market opens, I need to have a pullback right into the open. So the pullback is available into the open. And if this is where the market was going to open at the same price as it was, the day before and into the evening, then I would expect it to open, the market to drop up a little bit and then pull back. Once the market has pulled back, now I'm looking for the long trade. If the market was up here at the open, see this? If the market was up here at the open, I could be looking for shorts. If the market has already had the pullback, I could be looking for longs. Is that clear? Everybody got that? This is something that you write down, especially if this is new to you. This is something that you forever use. The market can behave differently for a week. It could even behave differently for a month. The market could even behave differently for 3 months. But guess what? It'll come right back to behaving the same way that it always does. Human beings can go to a mourning period, a very stressful period, but when that's over, they come right back to the way they behave. Remember that. So before I start my charts, this whole thing is already in my mind. You see, before I start my charts in the morning, this whole thing about the characteristic of the day, the behavior of the market the day before, it's already on my mind. What if I come here and the market opens up here and continues up? Well, that's okay. I let it go. I watch to see what the market wants to do. Then, at the same time, I'm warming up. You see, a key thing, not to get involved with the market when it's at its full force. When is the market at his full force? When do you expect the market to be at its full force? 9:25, 9:35. That's when the market tends to wake up. Everybody is pretty much ready at that point, except those that sleep in like I did today. So, are you warmed up? Question is, are you mentally warmed up to the market before you take a trade? This is important that you recognize about yourself. Are you warmed up to the market before you take a trade? That means warmed up to the market is the market open, the market's been moving, you've been watching the Eagles, the Hawks, you focus on the Falcon 16, 32, and 8, you are engaged. So actually what you're doing is you're getting yourself in a rhythm of the move. Oh, this is a 4 going up to a 5, this is a 2 going up to a 3. Like Dustin said on his video, he was looking for the ABC, took that trade. So he was engaged. He was engaged. If you rush to the market and at any time during the day, and all of a sudden you see an opportunity and you go jump in, you're not warmed up to it. You have to be really someone who, once you can do your 2.2 day after day pretty much, even if you take a trade and became a cost of doing business, you go ahead and you take another trade. Once you are really in a rhythm of the market, for example, I can warm up to the market in a couple minutes. That doesn't take me long. But by all means, I've been doing this for a long time, yeah? As you are learning, you got to feel the rhythm. It's almost like you're looking at it and you know that you know what the market is about to do. So when I start my charts this morning now, I like to take a peek at my 3. And this is about 8:30 through here. And I'm going to notice 1, 2, push up, push through. Okay, here we go. Kind of pushing off of the eagle here. Not quite, but very nice. Here, I'm going to notice that. I'm going to notice that there. I'm going to notice that the market is actually, for the most part, the market is having lots of 1-2s, and I'm going to notice that the market is actually recognizing the eagle today, and okay, good. The market is recognizing the eagle. The odds are good. If I was to, no, I didn't go through this morning because I didn't have to. When I got to this and really got into this, the market had already opened up, and there you go, recognizing nice 1-2 with eagle above here. I could see the market's behavior after the market open. So if I get involved with the market 10 minutes into the market open, for example, I don't have to go back because I can see it. Does that make sense? Okay, guys, I appreciate you typing yes. As you know, this gets you involved visually, audibly, and physically. And of course, if you know how to add feelings to the excitement of what you're learning, you will learn this really fast. One thing to notice, if you were here right at the open, and this is something I want you guys to really pay attention to what I'm going to say here. If you're looking at this area here, like this, you know that's a 3. This thing is working on a 3. This eagle needs to get below to be a 4. So you actually could expect this thing to pop up, come to unfinished business. That would be the deep, and then reverse down for a big ABC for the 4. Can you see that? Okay. But there's something here that is extremely telling. Extremely telling. If this thing does not want to pop up, if this thing pops up and doesn't want to come back, continues up, it's well acceptable. It's well acceptable because this is my anchor, but then this is my 32. What does the 32 say? So if I'm looking at the 32, what is the 32 saying right there? What is the 32 saying right there? Any idea? Steve, yes, it's going up, Steve, but why would this thing go up more? %61%, Wolfgang, yes, sir. So this thing the 61 is not good enough. You see it? The 61 is not good enough. Look at that. So the first thing I'm going to notice is that the 61 wasn't good enough, which means for the 61 to be finished, this thing would need to come up at least 25% up. Okay, 25%, what does that mean? If that's 76 and this is 61, the buffer would be in the middle, roughly in the middle. That's not quite in the middle there. That would be the middle, but for this to be a good 61%, the tendency, it gets in between the 61 and the buffer from the bottom. That's one. Now, do remember this. The market is very, very strong up, like here. The market is very strong up until it's not. So if you look at this here, for example, if you were looking at this here, the market is very strong up here, is it not? Market is very strong here. Do remember, the market is very strong at the highest point, pretty much before pullback, and it retested the pullback. Well, here the market is very strong. So my point here, you guys keep saying smart money, energy, the market is very strong up, but it hasn't topped out. Could this topped out right there on smart money on the 32? It could have topped out right there. Could the energy stop right here on the red and stop pulling down? It could, right? It's very possible. However, with the Fibonacci's, you can say, yeah, it could be topping out, but it's not complete. If the price went up and it was right up here, and you've hit that, then you had complete the 61. You have hit the red line of resistance, and you are at the red line of resistance right here. So the market now could pretty much just reverse from here and start the pullbacks. Can you guys understand that? Doug, the space between the eagle and the hawk does not say that the market won't pull back. The market can pull back to here and still continue back up. The eagle will still be above the traveler. The hawk would still be pushing up. What I'm sharing with you here, it's very important. This you cannot take for granted what I'm sharing with you here today, this morning. This morning. It's how you see it. It's how you look at it. Okay? Yes, 10 points. Or whatever it is that you're trying to come up with 10 points. But the point is, are you saying to the downside, Warren? Could be a 10-point to the downside, is that what you're saying? Yeah. What I want you guys to realize here, matter of fact, if all we did was talk about this morning, and you grasp this, or you reinforce this, this will boost your success tremendously. One of the things about the Day Trading Coach is that we stick to one product. Okay, we're not all over the place. We stick to one product. Each product, even though they move like this, for example, there's products out there that as soon as it hits a 61, boom, that's enough. There's products out there, if you were trading, the 61 probably goes into the halfway point almost every time and then reverses. And when you are trading a lot of different products, you're all over the place. Here, with the RTY, this is the characteristic of the RTY. Does that make sense? This is the characteristic of the Boston Bruins or the Philadelphia Flyers or whatever you call these teams. Okay? Teams play football, but they all have a different way about them. If you trade gold stocks, it's very... So, once you learn how to do this with the RTY, you will know how to go about noticing the rest. They all move with fibs, they all move with Elliott waves, but some of them, for example, some folks tend to drive faster than others. You guys really clearly understand what? Please hear me. Please pay attention. Please write these notes down and contemplate. You guys need to contemplate. If you want this to be a part of your subconscious mind, you must devote the time to contemplate the information without even looking at the charts. So yes, it's very strong up. It's very strong up this way. It's very strong up. Strong up. A lot of energy up, but guess what? The bars are already inside of the eagle. Already inside of the eagle. Now, when you hit the 50, you then cross the 50, correct? That's not a good 50. That means when it pulled back, the odds are it was going to go right through the 50 like it did. Another amazing piece of information that the market was giving you there. Now, this is not something that I just noticed today and you are learning today. This is something I've shared with you since you've been involved, so to speak. This is nothing new. This is not something, let's talk about this today because that's what he did. No, we always say to you, if you don't break the 50 and you don't break at least 25, it's not complete. That's the characteristic of the RTY. Here it is. So you'd expect now, and if you don't go correctly, the tendency is to come back and go high, break the buffer. What if it didn't do that? It doesn't matter. I always look for that behavior. Always remember that it's not going to be exactly the same way every single time. The market could be more enthusiastic. The market could be a little bit more aggressive. For whatever the reason, it's too cold, it's too hot. Or I got to hurry up and go fishing. Now, when the market, before it opened, that's what it looked like. So, not only the market looked like the 61 wasn't finished at this point here, this was the scenario through here. Let me make sure I got this in the right place. Yep. And so, if I didn't finish the 61, right before the market opened, I pulled back. The hawk is flat. The odds are good that I can push back up to finish this. 61 would mean a drop, pull back to 61, and we could continue down for wave 3. But why would I think wave 3? Why would I think this 61 would work to the downside when I got so much pressure up? You see what I'm saying? Plus, if I hit the 61 right there, and now I'm pushing off on a 61 to the downside. Here's the wick bar here. Then the odds are good I'm going to break that 61 and probably even get to the buffer. Is the eagle above the hawk here? Yes. Is the eagle above the hawk here? Yes. Excuse me. Let's go back here. When this happened here, is the eagle above the hawk? Is the hawk flat, like saying, I'm going to make a big base to pop up? Is the eagle above the, yeah. And then here, does this look like the zigzag? It's not a good zigzag, but okay, now I go back. Everything about this, it says long right at the open. Here's the other thing. If this is straight up and I'm breaking the buffers, when the market opens, it tends to go where? To a deep. So the question is, could this be the deep this morning? Could that be the deep? There's momentum. There is enthusiasm. Do you guys see all of this? Before you get engaged in a market, this is what's called being a professional chartist technician. So, I'm not going to take a trade to make money. I'm going to take a trade because assessing the market, this is technically sound. What if it didn't work that way? It don't matter. You rethink it, you reassess it, and you wait for the next trade. All right, so then market opens right here. And that is just a beautiful trade right there. That's a beautiful trade right there. The trade entry for this is the one I believe that Dustin took. That trade set up, look at your tree. Dustin had the 1, he was looking for the ABC, he had the 2, and he took his long trade there. I'm talking about Dustin because he emailed me the trade, and I happened to have time to look at it. I wasn't trading. I took a look at it, and you see that. So all the reasons to go long. This and the market open pulls back to the open tick here, A, B, C. Look at smart money going up in your 3 when the market pulled back. Now, each and every one of you are able and capable of noticing this trade, being this trade, and being completely done with the market by 9:31:59. The market had moved enough. The setup was here. The market literally needed, hold on, give me a second here. Look at your Falcon 4 in the same place. And notice, even though this is underneath here, smart money, notice the way the smart money was gauging up. Look at that. Look at the energy when a trade takes place. No, sir, John, you don't want to wait for the eagle to cross the 8. Well, I need to also understand exactly what you're saying. The eagle was above the hawk. Oh, you're talking the 8. No, sir. John, that's not your advantage. Okay? Because that's a 4 going up to a 5. And there is this 2.2 right here underneath here. So, John, you need to get more into wave 3, wave 4, 1, 2, up to wave 5 here, because it needs to cross the 61 here, and the odds are that's where it was going to go. Does that make sense, John? Do not wait for the eagle, because if the eagle crosses the hawk here, you could be right at the end. You could be right at the end of wave 5. At wave 5. This is really, this is actually, Clint, the eagle, the RTY is generous all the time. So I'm okay with what you said. RTY was so generous this morning. That means that the RTY is not generous every morning. Follow me? Guys, look, I'm not picking on anybody here. I'm just teaching you guys the way to look at it. If I think one day is better than another, or one morning is better than another, then I'm not confident. I'm not confident. Every day, when I look at the market, I look at the market with the expectation that the market is going to behave the same way. But the thing is, I don't fuss when it doesn't. This is why I'm able to stay with the market. I'm able to stay with the market. So, beautiful setup on a 3, gorgeous setup on a 4. This is why a lot of times I say 80% of the trades can work. But that's the trades that you follow the strategy that presents the same thing that allows you to be profitable. Okay? You guys understand what I'm saying here? When I say 80% of the trades work, I'm not trying to say that this trade would work up there is a particular presentation that the eagle and the hawk gives you, and if you know the characteristic of the RTY, the odds are in your favor. The odds are very much in your favor. Wolfgang, you, well, let's see what else was up here. Let's see what else was up here. Okay, so market goes back up, hits the 61, has a dual bar reverse. Of course, this is not a place for short, even though you hit the 61. Nothing here says take a short. And the market now hits the 76. So here's another part. Nothing about here was a short. Nothing. Here, this little guy. Okay, this little guy here. I'll move this out of here. Very strong to the upside. Eagle still above the hawk. The bars broke the eagle. So the 16 says the bars broke the eagle. When it's pushing down here, this is not a pullback. If this guy is that strong, okay. If this here was with a price bar over here, the price went to here. And now this one is wicking down, and now it's wicking down from here. The hawk is above the traveler. You could have a short trade to here, which is down here. See it? You could have had 2.2 plus here. You guys see that? You follow what I'm saying? Because if your tree should have set up here. Your 3 should have set up here. Your 4 should have set up. Now you got a short. If this was the case, if you pull back here. But that's not what happened. That's not what happened. What happened was, let me go back up here again. When that happened, you just had the drop. This red bar pushing off of this eagle is even a small wick. It is not a trade to the downside, even though the 8 looks really nice. And even if the 4 and the 3 look really nice, that eagle's still above the hawk on 16. And you just stopped at the 61. There's still pressure up here. For you to take a short here, you want this eagle, for example, below the hawk. Even something like this. Because you had a 1, 2, that's a 3, this is a 4 going down to a 5. Something like this. It wasn't there. It wasn't there. Something that have always helped me tremendously was my desire to study the trades that work with energy in one direction. It was my desire to see why this one would work, why this one would not work. I can have this picture, which is gorgeous on the 8, but this is what it looks like, for example, on a 16. Forget it. Because this is telling me unfinished business. This thing can get to the travel and bounce right back up. There's no need to take chances in trades up here. It causes pressure, causes nervousness. And then there is what's called guilt. And I want to get back into this conversation about guilt and shame. Because what happens when we take trades that don't work and we know we shouldn't have taken the trades, there's an amount of guilt and unworthiness, and we get upset because we already knew not to and we did it anyway. I want to get back into this because this is extremely important. I think only one time I did a class on guilt and fear and what kind of energy you're producing and how that can destroy everything that you're doing. So, I noticed this here at the time, but it's just, it just wasn't good enough. Here's something else. Did I push off the corner of the eagle here? I didn't. So, even though this looks so appealing, it was not the place to do business with the market. Here. Now, here's a trade right there. Here's a trade right there. Because here's the other thing. I hit the 61, and was I thinking this was a trade right there? This is that 1-2 flat hawk, unfinished business. Yeah, that was a trade right there. Eagle still above the hawk, coming off of the traveler. See the way you're coming off of the traveler here? See that? Eagle still above, way above the traveler. You're still here in a small pocket. 1, 2, boom, it takes off. And another thing too is these drops here. This one dropped a little bit. This one here didn't drop much at all, and it was kind of holding. And this guy's still marching up. It's still open. And okay, good for you. Good for you. Congratulations, Wolfgang. And the other thing is the possibility of the market still go to the deep, because this thing here is saying that the odds are good we're going to that deep. And I'm really not thinking 61 drop down because of the deep and because of the pressure. And this eagle still above, way above the traveler. So this would have been another trade right here. So that's the one you were talking about, Wolfgang. Another trade to go back up. Here, this boy here, inside of the eagle, the hawk still mostly below the traveler, smart money still pointing up. Let me line up all the charts. You just hit the 76. Is that a good 76? So if that's not a good 76, and the eagle's still open to the upside, and there's so much separation between the eagle and the hawk, why would I take a trade? Why would I take a trade here? And so no shorts, no shorts. Also, remember this. When you got unfinished business there, and the eagle's above the traveler, but your eagle looks like it's going to get stuck on a hawk. So if I'm looking at this here, and I want to take a trade here, that's a target right there. That's a target right there. I'll bring this back here. Now, another thing I did do at that point here is I had a red line on the 76. I possibly can make 2.2 here. I don't recall what it looked like on a 3 and a 4 at this point. But here's the thing about this trade. If you took the trade on this wake up bar and you did have a setup on a 3 and a 4, do be conscious. that this eagle is aiming to the hawk is aiming to the eagle, that means that the odds are good. This thing is going to be stuck on a hawk, glued to the hawk. When the price goes up, it'll come right back down. The point I want to make here is no extending targets. You follow what I'm saying? The point here on this particular trade, this is a long. It's telling you to go long. It's telling you to go long. The eagle's still above the traveler. You still need to finish the 76. But here's a trade you would not. This trade here, you could hold it to the 76. But this trade here, just go for your 2.2. And hold it for 76 if you are qualified. None of this is meeny, miny, mo. All this is very, very calculated. Very, very calculated. Okay, you see the way the eagle crossed the hawk here? Getting back up there, this thing can suck right back down. And now, you hit the 76, but that's not a good enough 76. $10. No. ABC of an ABC. Boom. Here's another possibility for long trade to go finish the 76. But the possibility, it's the same. But remember, this eagle here was pointing down. Look at the difference between this eagle here versus these eagles here. Okay, even here was stuck and pushed off. Right here. But that's because this guy is red. This was the first pullback. Boom, to go to the 50. See the difference here? This guy here, even though it's stuck here, it's this area here, and he needs to go finish the 61. Where over here, and so look at the difference of this eagle, look at the difference. This eagle didn't even open to the downside. Difference, big difference. The other thing is, here, you had to go there to finish this 50 and go back up. So this combination here would work because of the Fibonacci's, and this was the first pullback after the push-off. Where here, now, you're right on top of the 76. You follow me? Can you guys see what I'm talking about? Okay, 10 o'clock pushes back down. Let's bring this thing back to unfinished business. The 76 is not complete. ABC right here. Now, let me go find it. Right through here. I am still looking for long through this. Not looking for shorts, I'm looking for long. And I want to be able to show you where I took my trade. I stayed out of all of this. This eagle is too lazy to take a short here. This eagle is too, the odds are when you break this eagle, you're going to push back up. When you break this eagle, is open. This is a push down. That's not a pullback. If this thing was to wick down from here, so if this thing was now to wick down from here, I could take a short down and see if we'd get to the traveler now. But still, my 76 is not finished. I stayed out of it. I stayed out of it. Until over here. So let me bring this whole thing up to speed here. Let me set up my 3 and my 4 so we can bring it back. I did post the trade. Start my camera. So let's see this. Peekaboo above the hawk. I broke the hawk significantly, and the traveler, I pull back. When I pull back, I got like double bottom. Then I got 1, 2. My hawk is flat, and my target can be up and through that 76. Took my trade right on that bar. Right on this bar. That's why I took my trade right there. Bar wakes up, I click, gives me 2 point something, and I was done for the day. That's it right there. You guys can see it. And I was done for the day. That's it. I did this trade with 10 contracts. I end up with $1,445. I had lots of fun really analyzing this morning's market. And it did finish the 76 correctly. And that was it. That was it. $1,000 a day. It's $5,000 a week. It's $20,000 a month. And some days you make a little bit more. Some days you make a little less. And of course, as you trade with more and more contracts, beautiful. But it was a peaceful trade. It was a trade that I had, I was certain. What if it didn't work? Well, then I was certain and it didn't work. Cost of doing business, start again. But it was a trade that took me minutes, guys. It took me minutes. I did not. There is no shaking. There is no nervousness. It's just, okay. Now, with 10 contracts, if this trade didn't work, I would have given the market $500. And that was if it hit, if it slipped, $500. But guess what? Oh, and my target was this here. This is what I was looking for. Right there. And right below the 76 to complete. You guys never, I mean, I don't trade from greed. I don't trade from greed. I simply trade because it's technically sound to do. And if the market does what it normally does, I profit. I profit. That's simple. Any questions?